Hello everybody. So this video is entitled MSTR stock sells Bitcoin to cover the dividends on all of the preferreds as well as the dividend on Stretch, which is their monthly, bi-monthly, twice a month dividend preferred. So they sold the Bitcoin to pay the dividend, and the reserve, the cash reserve, was left unchanged. So the same level as last week. And of course, the headlines are pretty bad. I mean, everybody's reporting the sell. Oh, Saylor sells, Saylor sells. The same thing as last time. The question is, will the headlines hold this time? Will the headlines hurt the stock this time? Perhaps not, because Bitcoin is showing some strength. Bitcoin is going slightly back up, and the price of Bitcoin mostly drives the narrative. I think the uneducated takes on the asset, like, oh, he needs to sell, oh, he doesn't have the cash, oh, he can't afford the dividends. These takes, I think, are not nearly as strong as they used to be when they created fear back in the month of June, where the FUD was the peak FUD. I'm just going to go back on Stretch, talk about Stretch. The level of peak FUD we had last month was just unfathomable. So let's look at objectively what's going on. So he sold $216 million worth of Bitcoin to cover the dividends, and cover the dividends exclusively with the Q2 dividends for Stripe, Stream, Strike, and Stride, as well as the monthly dividend for June for Stretch, STRC. That's what the sale of Bitcoin was for. So again, I guess I was wrong, because I thought Saylor really didn't want to sell. I guess he's serious. He wants to, as he says, inoculate the market. In the grand scheme of things, this is still a very small sale compared to, what the $50 billion bag worth of Bitcoin that MSTR has. This is a very small sale, still in the grand scheme of things. We are nowhere near selling billions. But why does this make sense from a purely mathematical standpoint? Well, it makes sense because you get to tax loss harvest. You get to tax loss harvest, and I don't know how in the accounting they are going to recognize that. I don't know which coins will be recognized as a loss, and I think it all depends on how they want to report it. But I want to point out, so average price 75.5, average sell price 59.2, and average sales price 6,700. So showing a baseline $15,000 loss per Bitcoin. But if in the accounting they select some of the Bitcoin that was bought exactly a year ago, when Bitcoin was squarely sitting in the 110 category, you can see there's a lot of opportunities for capital losses, especially I'm looking at that July 29 buy of 2.4 billion. There's a lot of opportunities to book accounting losses. And why is this important? Why is this important? Well, it's important because Saylor wants to maintain the return of capital status on the prefs. He wants to be able to show ROC, return of capital, dividends that are tax deferred, as opposed to dividends where tax is due right away. And this is a way to manufacture that. Selling the Bitcoin bought at the peak is a way to manufacture that loss that will maintain the dividend as a ROC dividend, a ROC dividend. And it makes quite a bit of sense from a mathematical standpoint. The purists, of course, will be upset that he sold Bitcoin, and I'm sure Saylor doesn't like to do it. I'll still maintain saying that, but he doesn't like to do it. But the math is the math, and it's actually good to book these losses, these paper losses, as long as you are a net acquirer of Bitcoin, and that's new. That's a new fact too, right? Back in the day, he didn't have the prefs. Now he designed those prefs in order for them to pay a return of capital dividend, which is a central point for always owning those prefs. Again, if you're outside of the US, maybe it doesn't matter as much, but if you're in the US, the return of capital dividend is a big selling point for the prefs. Also, I see some takes online. Oh, why didn't you use the cash reserve to pay the dividends? I thought you had a cash reserve. That's not what the cash reserve is for. The cash reserve is to maintain the creditworthiness of the instrument, to maintain that BTC rating, and also remember what happened when he used the cash reserve to buy back the converse. The market didn't really like it, and it's clear that when he added to the cash reserve last week, the market really, really loved it. So the cash reserve may really help in the eyes of investors, really help back the creditworthiness of these instruments. So I don't think he's going to touch much the cash reserve for now, at least until we're out of the woods with this BTC bear market. I would argue Saylor is handling the Bitcoin bear market really well, because we are in a bear market, right? We are at $62,000 Bitcoin, right? We're halved compared to last year. This is a bear market. This cycle of Bitcoin has been very, very, very disappointing. And because the cycle was very disappointing, of course, strategy, at 100, I'm not happy. Strategy did worse than it would have done if we were still in a bull market. We didn't get the top, what they call the blow off top, right? We didn't get any of that. We didn't get any of the prices that pundits were predicting, analysts were predicting. We didn't get anywhere near that because the market has been in turmoil since 10/10, since October 10. Growth stocks, assets like Bitcoin, crypto has been in a turmoil since October 10. Nobody could have. I definitely didn't foresee that. That was annoying. Anyways, I think he's managing the bear market pretty well. MNAV is 1.08. That makes sense that you wouldn't sell too much equity here. This is too low. Even for me, I find this low. 1.2. 1.2 is to me it's kind of a better sweet spot. If he were to ATM MSTR stock, though, it would still be accretive. Worth mentioning. You would be printing a $100 bill for 108. It would still be accretive if he were to do that. But he's clearly not managing for that right now. I think he's seeing that tax loss harvesting as a big deal. Let's talk about Bitcoin quickly. Bitcoin, the usual Monday morning dump, like the usual 1 hour before the market Monday morning dump. This is the market manipulators at hand, Bitcoin recovering into the day. But this is where I want to conclude, of course, talking about stretch. If you look stretch, we are back above $90, right? Or between 89.50 and 90 and change. We're back at $90. This is a very, very big deal. The market act as a coil. Saylor's talked about water and a boat in water, and about how if you push the boat down enough in the water will exert back by pressure and will give you more pressure. It's like trying to put a ball in a swimming pool, right? Try to get a balloon, try to put it in depths, right? You can't really do that long enough, and that's exactly what happened to stretch. If you look at the chart, right? This is from Finviz. If you look at the chart, we are seeing this pattern all the time. Of course, this pattern of getting below 100 was the worst in the history of stretch. Again, I had never seen such a FUD storm like we had in June. I had never ever seen that. But I think it will be worth mentioning that we went as low as $70.83, and we are now back at 90. So it's a 27% gain from that $70. It's unfathomable how crazy the market got. I think the main takeaway of this video is that these assets are not for the faint of heart. This volatility is quite insane. The main takeaway here is that if you don't love vol, be very careful about these assets. That would be my takeaway. Now it's very short lived. It's we are already bouncing back. It's very short lived. So this is reassuring to see that. When will we get back to 100? Again, the answer to that question is based on Bitcoin. It depends on Bitcoin. If Bitcoin heads back to 70. I think this is going to be a beautiful moment for the prefs if Bitcoin gets back to 70. If Bitcoin continues to trade at such disappointing levels, Unfortunately, Stretch can't do well, MSTR can't do well. And that was always the deal. If Bitcoin doesn't do well, none of this can do well. So anyways, I think Saylor is managing the bear market as best as he can. And given all of the FUD that he's getting, given all of the dislike that he's getting, I think he's handling the best he can. And I'll maintain by saying that he didn't want to sell, but he still sells because the math says that you should capture the capital losses. That's what the math says, especially when you have a lot of buys at 110. Capturing the capital losses will be good long term because you'll be able to keep this return of capital high on these prefs. So anyways, this was not investment advice. This is not financial advice. This is only entertainment on this channel. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.